Opera is dropping nearly 30% in reaction to $300 million mixed shell offering. This happened on Friday, and the drop really is just in reaction to share dilution. Obviously, that is never a good thing for any stock. No investor ever appreciates a company issuing new shares, right? So this offering is not being received with open arms by investors. We're really seeing a significant sell down of shares with obviously the 30% move lower. But is this drop a buying opportunity is the real question for shares. And I'll jump into the chart and tell you why I think this could be a potential buying opportunity. First off, this is not financial advice, so please do your own research in D&D, but shares are coming down to test this 50-day moving average at about $17, $18. So this $17, $18 level, I believe, should hold and lead to a larger move higher over the coming weeks. So I don't think this is kind of the end for the company. I think the company's financials are pretty solid and the fundamentals are solid as well. And I'll jump into both in a second. But I believe this 50-day moving average likely holds, as this level actually coincides with where shares had bottomed back in late June. So I think this is obviously in reaction to the news, of course, but I think when you look at the chart, in a vacuum, it really just looks like a pullback within a larger uptrend. So I'm not calling, game over for the stock. I think the fundamentals are pretty solid as well, like I had said. And as you can see, we were massively overbought according to RSI prior to this sell-off. And now we're kind of, moving lower off of those overbought conditions. So, like I said, healthy pullback within a larger uptrend. I believe this 50 DMA holds around 17, 18 bucks, and we see a continuation of the move higher over the coming months for this stock. So with that being said, I'll look at some seasonality trends for shares. So this shows me which months the stock does well in, which months the stock does poorly in. So right now, we're actually in the fourth best month of the year when we look at the chart averages. So in July, the stock typically rises 18% over the month of July. So seasonality trends are in the bull's favor. Obviously, only 4 years of pricing data here, so not the end all be all. But between July and August being positive months for the stock, I think shares likely continue higher. Obviously, that thesis is more based on the chart than anything. But with that being said, let's dive through some fundamentals of the stock. So this is a article written by Felix Fung, and he makes a couple good points here. So first off, just kind of assuming you don't have much knowledge about the stock. So OPRA is a Norway-based technology company that specializes in developing browsers. It offers multiple browsers for gaming, crypto, iOS, Android, and more. The company differentiates itself from other browsers through unique features such as ad blockers, a free VPN, integrated messenger, crypto wallet, etc. Its niche-specific browser also provides users with a much more personalized experience. These advantages help Opera quietly accumulate over 319 million monthly active users, with 76% coming from mobile browsers and 23% coming from PC browsers. Other than browsers, the company operates Opera News, a leading personalized news aggregator. It is one of the world's largest news platforms with over 350 users and has specifically strong presence among African and European countries. So in 2019, the company launched Opera GX, which is a gaming-focused browser with dedicated features such as performance control, Twitch and Discord integration, gaming feed, and extensive customization options. It quickly gained strong momentum and already has over 21 million monthly active users. In 2021, the company acquired the 2D gaming engine GameMaker, and subsequently launched GX Games, its own gaming platform that allows users to create, publish, and play games. So PC Games currently has over 2 million user accounts and 4,000 games. So this company, is in all of these new areas, right? It's in crypto, it's in gaming. It's even providing free VPN, so it's kind of fighting, that data mining and data harvesting we're seeing that be so prevalent on pretty much every single browser and every single platform you go on today. Also, they're in AI, which is kind of been providing the stock some a trading multiple that is trades at a premium to the market. So OPRA should be a major beneficiary of AI. Thanks to the rapid development of AI, the company has recently launched Ariel or Area, its own browser AI made in collaboration with OpenAI. So they have that deal with OpenAI, which is definitely a big benefit to shares and well, really shareholders. So this is natively built in its company's browser and provides free generative AI services with access to real information from the web. Unlike Bing or Chrome, Opera's browser also allows users to connect Ariel to multiple AI models for better flexibility. And I'll read a quick quote from their CEO. He says, "I am thrilled with the early integration of generative AI services into Opera browsers, including an AI assistant to make our users' browsing more efficient. Initially, AI is a retention and engagement tool, as we are already seeing significant interest by the early adopters who have begun to take advantage of these features, and we find ourselves in an excellent position to build out new cases across AI services as an independent and trusted player in the ecosystem." So this is pretty cool, and there's a nice visual here which kind of shows you how this actually works. So you can go to a news article and be like, hey, shorten this for me, or what's the main point, or even create a tweet based on this article, which is pretty cool, right? That's going to save a lot of people a bunch of time. And then there's also prompts where you could say, you could highlight a word and be like, all right, explain this briefly. And you could explore it, which is pretty cool, right? Like that this is something that could save individuals a bunch of time, which anytime you're providing people value and you're saving them time, it's always a benefit, right? So awesome to see all this. I definitely think the company is in the right sector and has the right mindset in terms of the fundamentals and what they're doing to help grow the business. But with that being said, let's take a look at the financials of the company. So PE right now, for the next 12 months, obviously the company doesn't make money, but over the next 12 months, the company is projected to be profitable and have a PE of 38 times, which is above the sector median and above the stock's 5-year average. But 38 is pretty solid, especially for a company that has an AI tilt. That's definitely pretty cheap when we consider some of the other AI stocks that are out there. And price to book ratio is at 3 times. For those that don't know, a price to book of 3 times simply means that the market cap is 3 times the value of the assets on its balance sheet of the company's book value. So 3 times is pretty solid, and that's actually below the sector median. For those that don't know, you want this number as low as possible. Anytime you see price above something, you typically want it lower. So good to see that there. And the company also has a dividend of 1.4%, which honestly is a little bit suspect these days, especially given the company is, doing offerings. But with that being said, you add it all up, I do think the valuation of this company isn't crazy, and could, kind of lead, to some investors, jumping into the stock. But anytime you see a company that doesn't make money, you always want to see growth numbers rationalize that valuation. You always have to see strong growth when you see a company that doesn't make money. And with this stock, we're definitely seeing that. So revenue growth is 27% year over year, which is very solid and is over double the sector median, although it is below the 5-year average for the stock. And then when we take a look at growth for the next 12 months, we're seeing growth at 20%, which is over double the sector median, but is also below the 5-year average. And then we see EBITDA numbers look pretty good, 600% growth. So the company is definitely moving towards profitability, which is what we want to see. And then when we take a look at operating cash flow growth for the last 12 months, this has been 110%, which is well above the sector median at 6%. And then operating cash flow growth for the next 12 months is projected to be 39%, which is triple the sector median. So decent growth numbers there, all looking pretty solid. And then gross profit margin looks very good as well. So these profitability numbers all look pretty solid. So we have 59% gross profit margin. For those that don't know, that basically is just revenue minus cost of goods sold. It tells you what you're making on the products and goods that you're selling. So to have a 59% gross profit margin, I would say that's pretty good. Although it is below the 5-year average for the stock. Things seem to be a bit expensive for the stock when you kind of look at all these 5-year averages, just kind of a general observation there. And then net income margin is at 11% compared to the sector median of 1.9, but this is still, nearly half of what the 5-year average is for the stock. So, although all these numbers look very good when you compare it to the sector, when you compare it to the company's history, they are a bit weak. Just an observation there. And then cash per share. So the company has about $1 in cash per share, which is about 5% of the market cap is in cash, which isn't too shabby. But honestly, if the company had a great cash position, they probably wouldn't have done an offering today. So definitely a bit more to be desired in terms of that balance sheet safety. So that's kind of where the stock is trading in terms of financials. I think the numbers look pretty good, although you just have to be kind of sober and aware that the company, all their numbers are below their 5-year averages. Just an observation. Not saying the stock's going to zero. Not putting a sell on this stock myself. Like I said, I think the chart looks pretty good, and I think shares likely rebound from here. But it is worth at least noting that the stock is trading at high valuations relative to its own history. But then when we take a look at analyst coverage, so there's only 3 covering analysts, and they all have buys on the stock, which I do like to see. So the highest price target right now is $22, which obviously shares fell below today. But be on the lookout for a couple updates. Anytime there's a big news event, it's very common to see an analyst come and update their price targets and put out a new report on the stock. So don't be shocked if you see a couple price target updates for shares here. So with that being said, I'll kind of sum it up here. The offering isn't the end of the world. At the end of the day, it's only $300 million, and the stock is worth about $2 billion, 2.5. So, not this isn't a stock killer. This isn't going to kill the stock. Although obviously no one likes to see an offering. At the end of the day, the stock is the company is raising new capital because it's trying to invest heavily in growth, right? And it's had a pretty good history of investing in growth and acquiring users, right? So all you can hope for is, as a shareholder, that they're going to be successful in that endeavor once again here with this offering, which is what I truly believe. And then when we take a look at the chart here, like I said, I think this 50 DMA likely holds, and we see a continuation of the move higher for shares, which have obviously been outperforming since last November. So still bullish on the stock, or I shouldn't say still because I haven't made a video about this stock, but I'm bullish on the stock. I've read up on it, and I think we're seeing a bit of an overreaction in the market today. The general market is kind of rolling over today. Maybe not rolling over is a good word, but we're seeing the high valuation names throughout the market trade lower today. So that's likely exacerbating this drop in shares. So with that being said, I'm bullish this stock. I likely think that we move higher off of this 50 DMA. So with that being said, I will end the video there. If you got some value from this video, please leave a like. We post company breakdowns and important market moving news on this channel on a daily basis, so make sure you are subscribed. If you would like to receive my daily portfolio moves, my exits, my entries, and see how me and my team of analysts are trading the markets, join the Discord through the link in the description below to get our free 7-day trial. Also, if you would like to join our free daily newsletter, sign up to our Substack, which is linked below as well. With that being said, good luck everyone. Happy trading, happy investing.